What if the biggest winners of the AI boom were never the AI companies at all? What if the real fortunes went to companies selling the memory chips, the hard drives, and the servers that make AI possible? In 2026, that is exactly what happened. One storage company's stock is up 4,000%, while the company most people think owns AI gained a fraction of that. Today, we reveal the hidden stocks that became the biggest winners of the AI gold rush. And trust me, the story is wilder than it looks. Here is the number that should stop you cold. In 2026, the 5 best performing AI stocks are not OpenAI, not Anthropic, not any chatbot developer, and not the Magnificent 7. They are a memory chip maker, a storage company, a server builder, and 2 hard drive giants. Investors have made a stunning bet: the biggest bottleneck in AI is not the software. It is the physical stuff underneath. The chips, the memory, the storage, the power, and the cooling. Wall Street calls this the picks and shovels trade. After the gold rush, where the people who got rich were not the miners, but the people selling the equipment. In 2026, that trade went vertical. By mid-year, 42 stocks in one major index had more than doubled in 12 months. And at the top of the pile sits a company you probably forgot existed. Subscribe now, because you will want to see who it is. Let us start with the most shocking number in this story. SanDisk. The NAND flash company most people last thought about when buying a USB drive. Its stock is up 4,094% in 1 year. Put that in perspective. If you put $1,000 into SanDisk in mid-2025, it would now be worth over $41,000. That is not a typo. That is the biggest gain of any major stock in America, by a mile. Why? Because every time a company trains a model, it needs to store the data, and NAND flash is where that data lives. SanDisk's data center revenue exploded 437% year over year. Spun out of Western Digital in early 2025, it became the hottest stock in America in 18 months. Now, if SanDisk is the flash story, Micron is the memory story, and it is almost as insane. Micron makes the high-speed memory that AI processors cannot work without. Every GPU needs memory to feed it data, and the more powerful the model, the more memory it needs. That put Micron at the center of the boom. Its stock is up roughly 775%. Its last quarter was a record, $41.4 billion in revenue, almost $20 billion more than the previous quarter. Cloud memory revenue more than quadrupled. And here is the kicker. Before this boom, memory chips were considered a boring, cyclical business that investors avoided. In 2026, they are the most sought-after commodity in technology. The third winner is not a chip company at all. It is Dell. Yes, that Dell, the PC company you have not thought about in years. Dell pivoted into selling fully assembled AI infrastructure, servers, storage, and networking, ready to plug in. The bet worked. Dell's AI server revenue hit a record $16.1 billion in 1 quarter, a 757% jump year over year. Management raised its full-year AI revenue target to $60 billion. The stock is up 263%. And Dell is not alone. Seagate is up almost 200%, and Western Digital over 150%. Even Bloom Energy, which powers AI data centers, is up over 1,000% after a partnership with Oracle. In 2026, the AI trade is not about software. It is about hardware, and especially about storage. If you are enjoying this deep dive, hit subscribe right now, because we break down stories like this every day. But here is the twist that makes this story fascinating. The company everyone assumes is the king of AI, Nvidia, is up just 20% this year. 20%. The chip giant that became the first $5 trillion company is suddenly the laggard. Why? Because investors have already priced Nvidia to perfection, and the market is hunting for the next bottleneck. Where is AI actually constrained right now? Not in GPU design. In memory capacity. In storage. In power. In cooling. One strategist put it perfectly: the market believes the biggest profit opportunity is in the physical capacity needed to build AI, not the software running on top of it. That is why a USB drive company is beating the most valuable company in the world. The gold rush has shifted from the miners to the shovel makers. And that shift creates absurd gains, and equally absurd risks. And the risks are real. Morningstar analysts say more than 60% of the triple-digit gainers are now overvalued, and only a handful have any durable advantage. The top 5 performers have no economic moat at all. The memory industry is famous for boom and bust cycles. When memory prices crashed in past decades, these same companies lost 80% of their value. And there is a fresh cautionary tale. CoreWeave, the AI cloud darling of Wall Street, saw $33 billion of market value wiped out in 2026, after short seller attacks and worries that AI spending is a bubble. When the crowd is this enthusiastic, the fall can be as violent as the rise. So what do we do with all this? The picks and shovels boom proves something important: the AI revolution is real, and it runs on physical infrastructure that somebody has to build. But quadruple-digit stock gains are not normal. They are the signature of a market in the middle of a mania, and mania's end. If you are investing, the smart play is not to chase the hottest chart, but to understand what you own. The companies selling the shovels may keep digging for years. Just remember that in the last gold rush, plenty of shovel makers went bankrupt too. If you learned something today, smash the like button and subscribe, because we dig into stories like this every single day. And leave a comment: do you think the AI stock boom is a bubble, or is this just the beginning? We read every single one. See you in the next video.